Today, there were 1.1 million shares traded, which translated into a value of 1.1 million Ghana cedis, and it's the biggest, the second highest since of course, the third highest since the start of the week, because on Tuesday, the market recorded its biggest performance since the start of the week. If you want to know the volume of shares that were traded on the market today, 1.1 million, which translated into a value of 1.1 million Ghana cedis. The composite index recorded a decline today, and that has resulted in the market capitalization also recording some 60 million CD loss as a result of what transpired on the market. Before I tell you what the returns is like today, let me share with you how some of the equities performed as at the end of the session. Of course, the biggest activity was in MTN, traded 1 million, a little over 1 million shares, which translated into 1.1 million Ghana cedis. There was one single price move on the market, and that was Access Bank. Of course, since the start of the week, we've seen single price movers, but that has been in the positive. Today's price mover was in the negative. Access Bank shared 25 pesos, and this has been the biggest loss in this equity since it started activity on the Accra Bears, and that has resulted in the markets, in the return declining by 4.16 points. So if you have invested on the market since the start of the year, your return is hovering around negative 2.24%. The financial stocks also recorded some 7.55 points decline, and that has also resulted in its return further going in the negative, and it stands at negative 1.59%. So the market was lively, but as a result of the huge loss recorded in Access Bank, that has resulted in the market indices being in the red.
Wow. Thank you very much, Abdul. We go for a short break. When we come back, we're going to talk to the co-editor of the latest book that has been launched by the World Bank in the person of Dr. Albert Zufak, and we'll give you more. I have with me in the studio Dr. Albert Zufak, who is the Chief Economist for Africa Region, the World Bank, also co-editor of the latest book launched by the bank. You're welcome.
Thank you so much, Edward, for having me.
Great to have you.
Thank you.
The book is mainly looking at trade on the continent of Africa. What informed the decision by the bank to do this research and come up with this report?
Edward, there are three main reasons why we started this research. The first is that Africa has contributed less than 3% to global trade for more than 60 years. That number hasn't changed and has remained stubbornly low, below 3%. We contribute to global trade only 3% of the value of trade. We contribute only 3% of global export, and we contribute only 1% of global export of manufacturing. So we told ourselves there was something wrong going on here. And as you know, if you keep doing the same thing over and over and expect a different result, that could be defined as madness. So we thought there was something to really investigate and understand why this situation has remained this stubbornly so. So second reason Edward, the world is changing and changing fast. But we also realize that as the world was changing, Africa trade policy wasn't. We were again stuck in the same old ways of dealing with trade policies. And how is the world changing? You have COVID-19, for example, that has come and completely disrupted all the value chains and changed the way trade policy is being done in other parts of the world. You have digitalization that is completely affecting the way the world produces, the world trades, and it is also influencing trade policy all over the world. You have longer term trends like value. Recent boost in trade between Africa and Asia, with China and India becoming the first trading partner of Africa and the first FDI, foreign domestic investors in Africa. All these are signaling a big change in the global trade environment. And if you add to that, in the recent years, in Europe, in some markets, and the reflux of some production on the continent of Europe, even in Asia, we're speaking of, reshoring. All these absolutely have prompted us to say, how does Africa always function that way? To the contrary, most of our trade agreements allow us to integrate, forward into global trade. Basically, we control people's export of high-value products, while we only contribute raw materials to that global trade. And that's why that number of 3% has remained so low, because it's not that we are not working hard, Edward. Africans are working extremely hard, exporting more and more cocoa, but cocoa beans that actually do not command supply capacity, supply value products in Africa, really reap more gains from international trade. And that's where your question really hits the nail on the head, because for that to happen, we need to implement sound macroeconomic policy. Why? Because you cannot export high-value product with an overvaluated exchange rate. You cannot produce high-value product sustainably with high inflation. Improve overall regulatory environment and allow the sector to jobs and produce tablets or chocolate powders that command more value than raw materials. You need to also invest in infrastructure we link to to markets in a more efficient way.
So in this direction, I'm talking about diversification.
Correct.
Looking at the continent itself, and with regard to the AFCT, what are some of the things that we need to do to be able to reap the needed benefit from this, trade area we've established?
So, before we get into the AFCTA, I think there is one important area of reform, which is for our countries in sub-Saharan Africa to rigorously with the US. It's quite clear from this book, from the analysis we have done, that number of African countries were not able to fill their quota of transformed product, of value-added product. Instead, AGOA has become export more oil to the US. So in that case, it's not helping our economies to transform, and we need that economic transformation.
But oil too is good in a way.
Well, oil is good because it brings some forex, it brings some revenue, but it also brings volatility, right? The price of oil is extremely volatile, and it leads to the fact that our macroeconomic environment is extremely volatile. The moment oil prices drop, most of Africa's GDP drops.
Like it's happening now.
Currently your desire to export at high level. Um, together to make an industry that could actually export some of the parts. It's not sure. Chocolate is actually probably the most decisive way to add value. It could just be specializing in some portion of that value chain, that the portion that brings the highest value. But we cannot continue exporting cocoa beans
raw
and expect something different.
Wow. Now, talking about cocoa, Ghana and Cote d'Ivoire,
Yes.
coming together to do that.
Yeah.
How can that be replicated in other parts of the world? And even that one, how can we get a needed support to be able to add value to cocoa? For instance, Ghana, we're doing about 40% at the moment, and we need to go higher than that.
Edward, I think the example of Cote d'Ivoire, Ghana, working together to capture a little bit more value on the chocolate value chain is a good one. It's a good example, and number of these must be emulated across Africa. In another book that my office has published last year, it was launched in November, on industrialization in Africa, we actually identify a number of regional value chains that can be implemented. Let me just give you a couple of examples. One, Togo exports phosphates, has been exporting phosphates for years, right?
Mm-hmm.
For not much. Yet the whole Africa spends billions importing fertilizers. Phosphate is key component in making fertilizer. Now, Nigeria, is on its way to creating a fertilizer company, a fertilizer industry. If they work together, Togo and Nigeria can now start together producing fertilizer for the Africa. Why not exporting it to the rest of the world? Why not, right? Then you have the automotive industry. And this is important for Ghana. Ghana is attracting the automotive industry. But, an automobile is just a sum of parts. Some are rubber, some are, advanced plastics, some are, some are electronics, right? So, number of African countries can actually specialize in ECOWAS in just one part. You can have a country producing just wheels. You can have a country just producing, the
upholstery.
Exactly. So it's that thinking this book is bringing. And we believe it's timely because the Africa Continental Free Trade Area is actually setting the stage for that to happen.
Did the book talk about financing, how to attract the needed funds to be able to scale up production and maximize returns to that effect?
Edward, when you speak to business, people across the world, most of them cite financing as constraint. And it's the case that in our countries as well, access to finance, especially for the small and medium-sized firms, is an issue. But the way to look at the questions from our perspective is to say, when there are business opportunities that are profitable, generally the financing follows, because bankers like to make money. So working to improve the investment climate, improving infrastructure, improving the logistics would definitely make business ventures more competitive, more profitable, that would certainly draw financing. But there is also a way to get our financial sector within countries to be a little bit more, forward or forthcoming in supporting domestic investment. Across Africa, we've clearly seen that it's not always the case. So, our domestic financial sector can do a little bit more into supporting private investment, domestic private investment.